When people hear Wall Street versus Main Street, they often imagine two completely different worlds. Wall Street represents big finance, investment banks, hedge funds, stock markets, billion-dollar trades flashing across screens in seconds. Main Street represents everyday life, small businesses, salaried workers, families managing bills, savings, loans, and financial uncertainty. But the real story isn't just about two locations, it's about two very different realities of money. On Wall Street, money is a tool. On Main Street, money is survival. Wall Street players focus on capital allocation, leverage, risk models, market cycles, and returns. They think in percentages, probabilities, and strategies. A bad quarter is a setback. A market crash is an opportunity. On Main Street, money is tied to emotions. A paycheck means security. A job loss means fear. A price hike means stress. Here is where the game truly becomes interesting. Wall Street thrives on movement. Main Street thrives on stability. If markets are volatile, traders celebrate because volatility creates chances to profit. Prices rising and falling rapidly mean opportunity. For Main Street, volatility is terrifying. Unstable prices mean uncertain costs. Uncertain costs mean financial anxiety. Inflation is a perfect example. When inflation rises, Main Street feels it immediately. Groceries cost more, fuel costs more, rent rises, daily life becomes harder. Wall Street, however, often adapts faster. Certain sectors benefit. Asset prices may rise. Investors reposition portfolios. Some even profit directly from inflationary trends. Same economic event, completely different impact. Another key difference lies in access. Wall Street has information, networks, analysts, advanced tools, and speed. Decisions are driven by data, models, and forecasts. Main Street mostly reacts. News arrives late, decisions are constrained, options feel limited. This creates a perception that Wall Street controls the system, while Main Street simply lives inside it. But the deeper truth is more subtle. Wall Street doesn't just move independently, it is heavily influenced by Main Street. Consumer spending, employment levels, interest rates, housing demand, all rooted in Main Street behavior, drive market expectations. If people spend less, markets react. If unemployment rises, markets move. If confidence drops, valuations change. Main Street is the foundation, Wall Street is the amplifier. Yet psychologically, the two operate on opposite mindsets. Wall Street thinks long-term, often detached from immediate discomfort. Losses are part of the model. Risk is normalized. Main Street thinks short-term because it must. Bills are monthly. Expenses are immediate. Financial mistakes are costly. A market downturn for an investor might mean wait it out. For a worker, it might mean layoffs. So where is the real game being played? Not strictly on Wall Street, not strictly on Main Street. The real game exists in the gap between them. In that gap live expectations, narratives, fear, optimism, and perception. Markets often move not on reality, but on what people believe will happen next, and those beliefs are shaped by both institutional decisions and public sentiment. If Wall Street becomes overly optimistic while Main Street struggles, disconnect appears. If Main Street becomes fearful, spending slows, affecting corporate earnings, which then shakes Wall Street confidence. It's a constant feedback loop. And perhaps the most important insight is this. Wall Street is driven by numbers. Main Street is driven by human behavior. Numbers eventually follow behavior. That's why financial markets can soar while many people feel economic pain, and why markets can fall even when daily life seems stable. Because the system is not just mechanical, it is psychological. Understanding this changes how we view money. Instead of seeing Wall Street and Main Street as enemies, we can see them as interconnected forces operating under different incentives, time horizons, and pressures. Wall Street plays the game of capital. Main Street plays the game of livelihood. Neither can exist without the other. And the real game isn't about choosing sides. It's about understanding how perception, behavior, and incentives shape the flow of money across both worlds.